Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely Westlake Village, California. And today we're going to talk about Bitcoin price action, what to expect in the short term, medium term, and longer term time frames. We'll also talk about Jerome Powell's Fed meeting today out there in Chicago, live from Chicago, and we'll go over some of those highlights. So the first thing I wanted to do is kind of reiterate the longer term stance, should I say. I don't know if this is going to happen in the long term or the short term, but our position that Bitcoin will land somewhere between 72 and 62,000. I would say before we make new all-time highs, that should be something to note. You got the 618 coming in at 72,000 and the 786 at 62,000. And well, we got the NASDAQ down 25% from the all-time high after breaking this major, long-term upward and basically hitting the targets immediately. And today was another seemed like a down day. Yeah, it was a red day for the stock market. Looks like a bit of a double top right there. If we get any kind of a closure tomorrow, I'd say below 1838 or, the middle of this wick right here, which, yeah, it looks like the next stop or next bounce point for NASDAQ is going to be around this level. We do have an anchored VWAP holding us up here at the moment, but that is a bearish candle, continuation candle, and apparently they didn't like what Jerome Powell said today. He said interest rates will remain unchanged at 4.25%, 4.25 to 4.5. I think that's the range there. He said that the impacts on the tariffs, on inflation and employment Powell expressed concerns that the recent tariffs could elevate inflation and particularly increase unemployment, complicating the Fed's dual mandate of price stability and maximum employment, which, gosh, what a joke that sounds. This is like a repetitive thing he always says. He said the markets are functioning despite the volatility. He blamed the recent downside price action to, hedge funds reducing their leverage and emphasized that such fluctuations should be expected during the current economic uncertainties. And he said, look, there is no immediate intervention planned, no money printer go burr in the immediate short term. However, he did say that, hey, they're willing to intervene if they have to. And his economic outlook, the Fed has revised their economic projections, lowering the GDP growth forecast for 2025 to 1.7% and raising the inflation forecast to 2.7%. And these adjustments reflect the concerns over potential long-term impacts of the current trade policies. In other words, those are two bearish statements right there, and that's why we had a red day. In the stock market, Bitcoin had a bit of a green day. A lot of altcoins pumped today, but I'd say NASDAQ and S&P in the stock market are going to lead Bitcoin, no matter how you like it at the short term. Bitcoin is, or in the current market conditions, Bitcoin is still considered a risk-on asset, and I would say this. This is the fib from the low to the high. Again, 786, 618. This big green pocket right here is where I would expect, especially if this does confirm as another lower high yet again, by closing anywhere below, I'd say 82.5 on the daily time frame. That would just be another lower high in the daily downtrend. And look, stop here, stop here. Definitely, coming for that liquidity down there at $74,000. Looks like that could happen. Now, how would I start to get bullish again? And I could move this little white line up here to right here at this level. 88,745, call it 88,900. If we can blast through there, make a higher low, then I'd be willing to start to get bullish again. Something like this. But when the Fed says, look, GDP is going down, meaning less growth, and inflation is going up, that sounds a bit like, I don't know, stagflation. Don't quote me on that one, but something is wrong there. The other thing I found interesting today is that the bond yields were going down, and that's kind of, I'd say, on the bullish side. or more people are running to safety. So people are willing to buy those bonds at cheaper rates. What else did I want to bring up here today? That is the medium-term time frame. We do have a weekly closure coming up. And this was a really bullish close. And I was saying, look, it looks bullish. It looks like it wants to bounce. It wants to come up there. But, volatility looks like it's curling back over. So you could expect a little bit more consolidation there. On the daily time frame, volatility is increasing. Momentum is just flipped to the downside from pretty much that critical zone. Let me check it out on my other trusty chart here. So this one, the stochastic, is still up, pointing up and to the right, but all these moving averages right here are considered major resistance alongside this hammer, gravestone, whatever you want to call it, this nasty wick right here. Took a lot of people out, probably going long right there. And the next area of interest is down here at about 74,000 bucks, 74.5. Price comes down there. I don't think it stops. I think we probably come at least to that level right there. And if momentum does cross down on the daily below 80,958, that'd be your first warning sign that we are headed down there. The bull case here, this is a bull flag. And, this would be the flag right there, and your measure move with a breakout there is coming in right at that wicked 95,000 bucks. So your bull case scenario on the 12-hour time frame. And let's see if we got up to the critical zone. No, 9. So if we crossed above 90 here, we're at 88, then that would be more on the bullish side. We did cross down right before the critical zone. And if we start to lose this line right here at 79, another warning sign, things are starting to come down. Checking out the 4-hour time frame, which put in a nice indecision candle here today. And I wonder if people are getting bullish off this news because he said we could print if we need to. Interest rates are remaining the same, so that's not good. We want interest rates to go down and the money printer to go burr, which means more pain needs to come. But how much more pain can we handle is the question. The stock market being down 25% from the all-time high. NASDAQ down 26% from the all-time high. How much more pain can we handle in the stock market, considering, well, it's been up and to the right for a very, very long time, since 2008. We've never really had a crash. This was a little hiccup here. And, getting a test down to the white 200, maybe coming a little bit below it on the weekly time frame, that would be, probably where the bounce comes in, if you ask me. Checking out Bitcoin dominance, still heading up and to the right. Dixie coming down here today, did have a nice reversal. That should help us out. Maybe we get a bounce from this region, and that's bearish if Dixie really starts, because if stocks are going down, well, the dollar's going down. Not the best sign. Lastly, taking a look at gold. So we talked about, before I get into gold, on Bitcoin, wrapping up the Bitcoin chart here. Short term, it looks like, a retracement for the week. Maybe coming to fill this thing out. I don't have a crystal ball, not financial advice, not a financial advisor. But as long as that green 55 is holding pressure down, expect a little bit more blood in the street. Again, could be totally wrong, but that is just how I'm viewing the market right now. And then to get bullish, let's see, on the hourly time frame, it's struggling. It's just struggling to get any momentum to the upside, and those downside moves have been swift and hard and fast. So if you got your bull goggles on, maybe take them off and put your bear goggles on, and be ready for, buying opportunities, cash on the side. And patience is the name of the game if you're looking to get in. On the other side of the fence, we wanted to take a look at my golds, my gold rocks, my gold nuggets, my gold coins. How are they doing? Let's see if I can get to the right chart here. Gold, man, too bad that's not Bitcoin. Too bad that is not Bitcoin. And I will point this out, and we did say this. We said, look, when this wick was way back here, we expect the wick to get filled, and she's getting filled all right, more than filled. And there's another wick, I think, on another exchange. I think gold's going to hit 3,400. 3,400 probably in the cards for gold. And then retracement time. This thing's overextended. There's the wick. That's the one. Look at that. We were watching this wick way back here in April and saying, wow, you know, maybe the good old crypto gold is, you know, an indication to come. And now just a little bit more at 34.38. Looks like she wants to get there this week, guys. Bullish on gold and even more bullish on silver. Silver follows gold with more gains. You know, if you ask me, you know, silver looks a lot more like more opportunity because it has not made a new all-time high yet. Gold has already made the new all-time high. You can see on the weekly, put in a massive higher low at the top of the range, and we got a target on silver coming in at 47.30. All right, that's it for me today, guys. I hope you enjoyed it. If you did, make sure you smash your like button and tickle the bell and do all the other good fun things to promote the health of this video. And I will see you in the next one. Take care.